So the first one really is what impact will the cost of living crisis have on collections in the short to medium term? And I'm going to start with Sam on that one.
Thanks. Well, that is the million-dollar question right now, isn't it? I think all companies are kind of going into think tanks and saying, well, what if? What if it's just a short-term thing? What if it's a full-blown recession? What if we go back to 1970? What if he pushes a button? What if? And I think today there were some articles that came out that the lowest end of the market are going to have an increase of about 10% on their bills, as opposed to the 5% that's currently out there. Fuel prices have gone through the roof. I don't know how many travelled by car to come to this event. Did you choose a lower down car? Did you choose a petrol car? Did you go electric? Yeah, it's all of those things. So I think it is just keep talking to your customers and being reasonable. And I think in one of the earlier talks we spoke about, you used to have maybe 3-month payment plans. Then COVID and it was 6 months payment plans. And actually, you're just going to have to keep extending that and understanding what's affordable. And conduct duty is going to come in and change things even further, but just making sure that you're not pushing people below the breadline.
Sheraz?
Yeah, look, I mean, it's hard to disagree with any of that. I think in reality, we're probably looking at a number of years worth of sort of increased costs. I mean, the energy price stuff isn't going to kind of go away quickly. I think we're all focusing on utility bills going up, but actually that's going to feed into the rest of the distribution chain. So, grocery prices will go up, supermarkets, transport and kind of overheads go up themselves. So actually that energy crisis is going to lead into increased utility bills and just general increase in cost of living. And you know what, it doesn't take a mathematical genius to kind of figure out, if income's staying the same, hopefully, and costs are kind of going up, then whatever is kind of left in terms of free income to service debt payments is going to be squeezed a little bit. So I think that's almost inevitable.
Tony?
Yeah, I think people have got over the last couple of years used to sort of different crises. Obviously, there've been a large part of the population who have had to live on 75% of their salary during furlough. So that there may be an element of resilience out there with people already. I think, as always, the people on the margins are going to suffer most. If you're already in a bit of financial distress, it gets worse. So whether it's a longer term thing, I don't know. But I think most companies now have spent a lot of time working out how to be a bit more proactive with customers. I think we're a bit less reactive than we used to be. So I think that in itself will help as well. But I mean, as a lender, then what we've got to do is look at what's happening here and now, and as you always do, adjust what you're doing, making sure that you're taking into consideration the actual circumstances that are going on around people now, and not what was going on 6 months ago. So I think lenders have got a big responsibility knowing what's happening around to their customers.
I think obviously you guys deal with commercial stuff, but you think there's going to be a bit of an impact on the SME market with owner managers, or I think it's probably less of an impact?
No, I think it is really going to impact them. We're already seeing it now in our sector, but I think we're more prepared for it because of COVID. Like you just said, we've been more proactive, we've been more sympathetic to the customers. So yeah, I think it definitely is going to impact them.
Pete, I think the second point to make, by the way, and it's not there, but the point is the conflict in Ukraine. I mean, Ukraine is, I've heard the phrase the breadbasket of sort of Europe. It's a key exporter for lots of really important minerals involved in production. You've got supply chains that are already elongated because of COVID. If you're trying to buy a new car right now, you're waiting 9 months. If you want to buy a Porsche, by the way, they won't even tell you when they can get delivery. That's kind of clearly.
It's going to be a new company as well.
But actually, what that means in practice is there's a lot of volatility out there right now. In terms of how that's going to affect people's sort of general living circumstances.
And I think the other thing that COVID did bring onto the playing field, and this crisis is going to continue, is you're now getting people who are going into debt for maybe the first time.
Yeah.
I think a lot of us who've worked in the debt collections market have always had people who've got debt and have got multiple debts, and it's a skill to budget. And I think you are now going to go into an area where you've got people who've never needed that skill, because we've been in a bit of a lull of, it's been good times really, hasn't it? Well, that's kind of changing, and you're going to have new debtors, people who don't understand about budgeting, people who don't understand how to tighten their belts. And I think that's going to come in with how we engage with these first-time customers and what we do with them and how you help them into this new uncharted territory.
I think Ben alluded to the fact that I've probably been through four recessions. We used to see that a lot in the commercial world, where companies were always messing around with the cash flow and didn't pay you on time, and were always, you used to get a check off of them, and guess what, it bounced. When the recession hit, they managed it really well, because they were always used to having to do that. It was the guys who always paid you on the nose. You got paid every single time. They're the ones who ended up going bust, because they didn't thought, they just got completely caught out, because they'd always done the right thing, they'd always paid you, and suddenly they couldn't manage the cash flow, and they were the one. So you were almost thinking, when you were doing your risk analysis on businesses, you were actually thinking, well, they're the ones who bounced the check, they must be really risky. But actually the real risk were the people who weren't ready for it, the companies that weren't ready for it. So, litigation. Do we see this growing as we move to a challenging economic period? And a question for Ange, of course.
Yeah, I think, but it depends on the business and their appetite for litigation. I know we do have an appetite for it, but it's not at all costs. We're very selective in the customers that we do take through the litigation process. We make sure that if we do secure the judgment, we are able to enforce on it. At the end of the day, judgment you're not able to enforce is just a piece of paper. So, yeah, I think litigation will increase, but yeah, that just depends on the company, the business. Brand reputation is always important. So, it's making sure we're taking the right customers through the litigation process and cherry picking the right ones to go forward.
Tony?
I think from a consumer point of view, I would hope not, because with consumers, we're talking about, and I think it was mentioned before, you've got your can't pay and you won't pay, so I think you've still got to treat every person exactly the same. So why all of a sudden we would get a big increase people who won't pay rather than can't pay, I don't really know. So we should be looking at solutions well before we get to the litigation stage, as long as people are engaging with us. So I would hope that the answer would be not, because we, over the last couple of years, as I say, people have found themselves in completely different situations they would have expected to, through no fault of their own. The cost of living crisis doesn't create a group of people who necessarily won't pay you. It just changes their circumstances and shocks their system, and they have to recalibrate, and we have to take that into consideration as well. So I would hope the answer is no.
Sheraz?
I sort of look at this question through the lens of the consumer duty, where we need to act in the best interest of customers, and you kind of, and as the compliance guy in the room, I've always kind of had a bit of a challenge with litigation. But then actually there was this really interesting FCA enforcement decision notice about the Yorkshire Building Society, because they didn't take enforcement action quick enough. They thought it was in a consumer's best interest that the debt would malinger, and actually it wasn't. The customer's interest would have been better served had enforcement action been taken quicker, and the debt was sort of capped in, the debt was capped in terms of its interest. So I think, we need to just think through how litigation is in that consumer's best interest post-consumer duty, and I think the YBS thing tells us that can be an answer to that. So I think there's sort of two challenges in that respect.
And Sam?
It's a very interesting one, because I think there's a whole lot of spectrum on the people who will pay and are paying. The can't payers, no, litigation is never really the right thing for them, unless it is to do the foreclosure and stop the housing thing getting worse, or in my world, getting the vehicle off them so their resultant debt is less. However, economic downturns also show an increase in fraud. If you can't earn it legitimately, you will earn it illegitimately. So I think that's going to come about within conduct duty and everything else. There's going to be a big increase in people who are taking out loans, products, whatever it is, with no intent to pay. And in that spectrum, litigation has to be the way. You have to show a bit of a firm hand once you've proven the won't pay intent.
See, I'm getting the hang of the clicker now. Right?
It's nearly the end of the day.
Is this where you're going to whale out some new questions, Pete, that we haven't seen yet?
So I'm going to ask this question of Sheraz, actually.
Oh, thanks.
Just to get you back there. So will collections recoveries become a globalised industry, and basically are we going to learn from each other, especially we've got COEO in the room as well now?
Short answer, I think, is no. I can give you a long answer, Pete, if you like. I think actually it's challenging to kind of do it on a globalised level. I mean, as the bio mentioned, I've looked after some compliance teams and collections consequently across a variety of sort of international territories. It's just so different, So in Finland, I learned they don't pay things by direct debit. When it's the instalment date, you send them an invoice, and they kind of have 30 days to pay the invoice back, and it's like weird. And I remember saying to people, "Hey, do people just pay you?" Yeah, they do. And that just seems really strange to us, because you kind of go, the key thing is to get it to be automated and not rely upon the consumer to take a positive action to pay you. So it will take a bigger brain than me, Pete, to figure out how to do it on a sort of a one-size-fits-all.
Sam?
You kind of asked two questions when you read the question out. So the first question was up there, globalised industry, probably not. Yeah. The rules are just different in every country, and people's cultures are different towards debt and paying things, and in some cultures, debt is even passed on past death and things like that. But you then asked, could we learn from each other? And I think the answer to that is yes. There are things that work in other countries that we can learn from and tweak and do differently. But would we become a globalised industry? I just think the rules and the laws and the governing bodies are just too different to really become globalised.
Tony?
Nothing to add to that, Sam. Thank you.
I think going back to my days when I worked at a trading, so again, it goes back to, we were saying about the different payment practices and stuff, and it was almost like in Holland, all the debt recovery charges were added to the debt right away. So I was being, from a sales point of view, I was being challenged to do as well as the Dutch sales guys. And I'm going, well, yeah, but people don't pay for collections. It's apples with oranges here, mate. Yeah. It's completely different. So this is going to be a question for Tony, given the fact you've just gone through a startup and all the joys of dealing with IT. But are we fast becoming an industry? Sorry, Steve. With every reliance on IT coders and developers?
I think, we're dealing with a lot of data, and you've got to be able to manage that data effectively. You've got to be able to mine it, see what's there, see what behaviour's going on. So I think it is a very important element within that you are efficient, and clearly, an efficient IT digital department will support that. I think there is already a reliance on your digital capability, but it's just part of the picture. I don't think it's in isolation. It's part of the evolution that's been happening in collections for some time. Yeah. I think it's definitely got a place, and it's just making sure that it fits properly within your strategy, and that you don't become over-reliant. I think it's been said a number of times before, there's a number of ways you can do things. The data and how you manage your data is just an enabler.
I'll probably go to Sam on this one.
We probably are fast becoming an industry of it. I think if you look back 10, 20 years, we had very little. Will we become totally reliant on it forever? Maybe not. I think we've got to get to a point where you have that good balance. So if you've got all the options, you've got all the tools, and you're using your data in the right way, but we also want to be careful that we don't force people down a sausage machine that actually doesn't fit their journey. It's all about giving the consumers the choices that makes it easier for them to do what they need to do. I was talking to a colleague earlier, and I was saying we've got customers who probably don't want to speak to us, don't want to pay us. If you make it easy for them, they will engage with you. If you make it difficult for them, guess what? They're not going to engage with you. And if you get that engagement, ultimately you hopefully get the payment. So I think we needed some of the reliance, some of the IT code, some of the how do you engage, what's the best way, what strategy suits, X person. But I think there's always going to be that human element that says sausage machine will never totally work when you're talking about people and people's bills and what people need the finance for.
Angela?
Yeah, I would agree with what Sam said. I think there's a definite place for it and for those digitalised strategies. But I think, especially in the debt that we deal with, and it can be really complicated with our customers having different services, in different industries. I think we do still need those highly skilled collectors, so we need that interaction with them to be able to resolve that debt as we go forward.
I think, again, going back to when I first started at CRS, a lot of the collectors were almost order takers. So they sat there just taking payments over the phone. That generally, that's probably 50-60% of the time we're just taking payments. I think now we're seeing it with the highly skilled, the negotiators, and they're almost like a welfare team as much as anything. So it has completely changed. Where it's demanding of a better, a higher skill set really than it used to be. Sheraz?
Yeah, look, I take a different view completely, actually, to the rest of the panel. I think, so the FCA do this thing called occasional papers. There's 51 of them, and around about 25 of them are around behavioural economics. How do humans make decisions and how do you influence them? The key takeaway to that is humans aren't rational. Yeah, humans, so the whole edifice on which we've built everything is, the human is a rational actor, and you do a very methodical income and expenditure, and if everybody's rational, everyone would budget every month, yeah? I was 30 till I did my first budget. So actually, where I think we're getting to is this very much what the IT guy was saying around, we're... Steve? Is it Steve? Steve. I thought it was Steve, I wasn't sure, so I thought... But look, it is all about testing and learning. A/B. How can we nudge and influence customers to get them to, want to make a decision? Yeah. Some customers want to interact at X time. Some customers want to interact at Y time. How can we learn from that? And actually, that isn't a sausage machine. That isn't around one size fits all. That's actually providing a level of customization that an army of humans cannot do. And for me, it's going to become much more and more and more around digital distribution, with a sort of a sprinkling or seasoning of these kind of trained ninja experts who kind of just slot in when required. But I think we'll see humans become less and less involved in collections.
Interesting.
Is that by choice or because COVID and the way we've all moved from a cost-based perspective has forced them? So I read an article on, we all say customers are choosing the digital journey, and I'll call out, I am actually a big believer in the digital journey, but did our customers choose that, or did we force it? Because COVID happened and everyone shut down their phone lines and said, self-serve, guys. Self-serve is the way to go. So they had to self-serve. If you go into, the local high streets, all the banks are shutting down and you're going to have to use your banking app and blah, blah, blah. But there is a huge tranche still of people who, if you gave them the choice, they would prefer a bank. They'd prefer a face-to-face. So I think the data that you get from the digital and the options that you get, absolutely, 100% behind that. But I think saying all customers prefer it, I think is more, we've chosen it because it's cost effective for our businesses, and we've forced people to adopt it.
But let me frame that for you differently. Let's say that your can't pays and won't pays that we use as terms, yeah? These are sort of, I hate to say it, 1970s terms,
they are.
But they are, yeah? And actually the world is now much more about consumers operating with biases, heuristics, we all know about confirmation bias, we all know about optimism bias, we all know about the shortcuts that humans take. So how do we influence people's behaviour, right? So actually, maybe can't pays and won't pays aren't really a thing, right? Maybe it's somebody who's got a bias that's going one direction. And then, look, we've all heard about the Downing Street nudge unit, yeah? So actually it's about creating a customer journey, potentially, that is nudging the customer away from their current kind of bias or heuristic to something else. Now, you don't solve or challenge someone's heuristic by having a debate with them like you do having a collections call. It's that drip feeding, nudging. So I think actually, you're talking about, and I talk about a sort of a digital distribution channel, but I think it's about using that digital distribution channel that we have created to start to begin to proactively influence consumer behavior in a way that maybe we haven't yet fully thought through, because actually we've now got the tech to do it, and we've now got some insights into the behavioral kind of economics behind it as well. And I think that's really exciting.
Following the growth in the popularity of Zoom and Teams, on Teams I don't like it at all, clearly. Will there be a place for live video calls in collections? And Ange, you probably know why I've asked you this question.
Absolutely do. Yeah, I think where you're going here more than it is the virtual enforcement.
Yeah.
We have tried it. Has it been successful? No, is a short answer. Customers just simply wouldn't engage with it, and they were back down the traditional enforcement route. The reason why we did try it was COVID, to see if we could get them into the forced payment plans. It just doesn't work. They just don't want to engage in relation to it. You know, particularly our customer base, they don't want to engage with us anyway. Hence the reason why we go to litigation. 90% of our accounts just go through to default judgment because of that lack of engagement, and the first time we do get engagement is on enforcement. So in short for us, no, didn't work.
Right. So Sam, probably mainly outside of enforcement a little bit, but do you think we do phone calls? Do you think they're going to go?
It's a weird one, because I debated this with our CEO before coming out here today, and I was like, I don't see it in the collections world for a long time yet. Yeah. I see it in the sales world, I see it in vehicle recovery world, I see it in other elements of what we do as a business. Do I see it in collections? No. But I was watching the IT guy a little while ago, and I was thinking, actually, yeah, sorry about that. What about an avatar? Why not? What about an avatar? I don't know what it was about what you were talking about that made me think that, but it was one of the little pictures. I was thinking, yeah, that could work.
You could base it on me, really, couldn't you?
You could base it on you. and maybe that would be an encouraging, and maybe that would be comforting for someone. I don't know, but it is probably going to happen in my lifetime, which, you know, I never would have thought about, 5 years ago, let's be honest. 5 years ago, would I think we'd all be sitting having Zoom phone calls and doing conferences around the world and everything else on, no, I wouldn't have thought so.
To retire, being replaced by an avatar. Tony, any thoughts?
Yeah, I think it's an interesting one, because obviously we've got, a number of different channels which we can go to customers with, and there is an element of the customer not wanting that face-to-face. That's part of the issue. That's maybe why they've got to where they are, because they're sort of trying to avoid the issue to some extent. So the ability for them to go onto a portal and put information on and get a resolution without having to, face up to somebody is quite attractive to them. The ability to they can have a conversation over web, they can have a conversation over SMS. So whether it's something that's needed, I don't know, or whether we, continue to sort of explore different ways of supporting more vulnerable customers, and that's one of the ways to do it with them. But I'm not sure at the moment what great value it would add. Watch this space, because there's always room for something, isn't there? Yeah.
Sheraz.
Look, I can see a place for it in a vulnerability call, maybe. I can see a place for it in underwriting, in a lending journey, which we're looking at. Crikey, if you go to Curry's, they'll offer you a video call with an advisor to help you choose your washing machine, which is underwhelming as an experience. From that was my feedback. The guy didn't turn his camera on. So yeah, I don't know. I maybe in the future, but I don't see it being something that's going to be happening tomorrow.
So my job's safe for a bit. If the country adopts a 4-day working week, what will the impact be on customer service and collections? We'll start with Tony.
I don't see why it has to, because I presume not everybody will work in the same 4 days. So therefore, it's a question of, as you do now, you staff up to when you know that the customers are going to be there. So if it does affect it, then it looks like you've done it incorrectly. You know, it shouldn't. It shouldn't affect them.
Sheraz?
Yeah, same answer. I mean, we have a 5-day working week now, but people still get customer service at the weekends, so I sort of don't see why that would change.
Easy one, isn't it? Ange?
Yeah, there's not really much I can add. Are we actually going to get a 4-day week? Are we? I would love a 4-day week.
Well, they make us work 5 though, you do.
I unofficially do a 4.
Sam?
Yeah, nothing to add to that. We'll just structure days, won't we?
Right. Should there be more of an emphasis placed on collaboration between marketing, customer service generation and collection teams? And I think years ago, many years ago, we had one of our catalogue clients, we were looking to try and get the email addresses off them. And they said, well, no, those email addresses are held by our sales and marketing team, and we're not going to pass them to the collections team. Which was almost like, what? You've got the information, but you don't want it. Tony?
I mean, you would hope that this is already happening, to be perfectly honest. What most companies do, they don't look at things in isolation. So you've got your onboarding, and yet then you're in life are all part of one life cycle, if you like, for the customer, and your strategies around customer contact, appropriate to where that customer fits in your life cycle. So I'd be surprised if that isn't joined up in most companies nowadays, because it's a necessity, because if you're going to build up a picture of your customer, understand how your customer behaves at different points, then all these things have got to be joined up. So you would hope that if people are missing a trick, if they're still acting in silos and they're acting in total isolation, because all these things matter to each other. There is an impact of one on the other. So I think, if people haven't already got an emphasis on that collaboration, that sort of flow through, then I think they need to look at it and sort it out.
Well, I'll put it to Ange as well. Is it really about data capture and stuff? Do you think there's a lot of that going on, or do you think there is going to have to be more collaboration, or there already is?
I mean, talking from what we do, there is that collaboration. There has to be, and it has to be a two-way street with the information. If we're in the debt arena, it's passing back to the sales, marketing, what markets they should be targeting, in terms of who they're selling our services to. So for us, for example, I don't know, the hairdressing salons, good payers, target them for our water services. It should be, there should be that collaboration between all departments, really, not just the two.
I'll put it to Sheraz a little bit, and one of the things that, because you've got your compliance add-on, some of the conversations we've had with local authorities have been quite bizarre, that you've got a debtor, or customer, or we'll like to say a debtor these days, they've got a parking ticket debt, yet the parking department of the council won't show that information about the home address and the phone number of the person with the council tax team, because they think it's a GDPR issue. So it's do you think that there could be an issue with that, or is that just completely red herring?
So I'm a lender, and for the last 10 years I've done subprime lending, and actually it's the same team, credit risk, because actually you don't want to lend to that guy who's not going to pay you back the first month. So I'm sure everyone in the room here understands a default curve doesn't just go continuous. If you lend to 100 customers and 10 aren't going to pay you back, 3 of them won't pay you back the first couple of months. So actually, in this space, the trick is, what can we learn from kind of collections to make sure we don't lend to these customers in the first place? So I see it's part and parcel of the day job.
Sam, anything?
Yeah, same as everyone else. And I also think conduct duty is again going to continue to build on that relationship, because along with conduct duty, at every step of the relationship, every step of that journey, you have to ensure you're doing the right thing by the customer. And if someone's not paying us, we don't want new business to write them another deal. It's simple as that. Or if it's a fraudulent deal, we don't want 3 of them. So there has to be that open communication between all sides.
My slides got mixed up now, so this will be surprised. Will consumer debt levels become a political issue in the future? And who wants to take that question? Sheraz?
Yeah, but I think it is. I think it has been for the last 10 years since the FCA and pre-FCA regulation. They will be looking at it. There's debt levels. That's kind of why buy now, pay later is getting the focus, because people are worried that debt is kind of getting too high, which kind of takes this kind of social aspect to it. The whole subprime lending intervention comes from, look, I'll be very candid, people that drink lattes living in North London not really understanding how people that don't live in North London and drink lattes and the Guardians have to do budgeting, you know what? And that's led to some ill-considered interventions by the regulator. So it's definitely a political issue. You know what, I've spent years and years talking to the FCA about this. A lot of it comes from Treasury. You know, Stella Creasley made it a big thing, and she needs to make it a big thing, and we get a lot of focus from that. I've done a couple of innovative things in the space with the FCA. The minute an MP writes into stuff, suddenly everything, the whole tone of it changes. So I think it's long been a political issue. And actually, I think the solution to some of these problems is for it to become a more in-depth political issue, for actually to us talk about how do people get access to credit. Is access to credit actually important? Because we all assert it is, and we all think it is, but if it is, then actually it should be a political issue, because then we sort of need policy from government to sort of support some of those things. And the FCA is not a policy maker, ultimately. You know, so actually I think that politicalisation needs to happen further to solve some of the problems we're currently facing.
It seems to be like, sometimes it's like the emperor's new clothes, isn't it, with the government? It's like what the hot topic is for the day, that's what they do, so.
Yeah.
Tony?
Yeah, no, I think it, as Sheraz says, it's been a political issue for quite some time, but it's one of those flavour of the month type things, isn't it? Because we know our economy is based on people borrowing and spending and reborrowing and etc. And they have taken a hammer to crack a nut in certain, sectors. But I think it's probably a bit of a thin line that they go against. You can't change the behaviours as we are as a society overnight. There's not enough funding into the organisations, amongst the fairer finance and that sort of. The credit unions don't really have a big enough impact on what's going on. So unless politically they come up with quite a lot of money and funding for the lower end of where people. So if you're taking away your home credit, you're taking away your sort of high cost short term credit. There's got to be an element of support in terms of the other types of companies which are not going to be profitable by themselves, so therefore they need to be propped up. So if they're not prepared to do that, then there's further issues going to happen. Obviously, buy now, pay later have started to fill a bit of a gap, but they're now coming under pressure, as they come into regulation. So I think it's one of those political issues as we get closer to elections and things like that becomes more of an issue, and people sort of wax lyrical about what individuals shouldn't be and should be doing without really understanding the circumstances and the needs of those individuals.
How are we doing for time, Ben? Have we got lots of questions? Yeah, do you want to? Yeah, do you want? Yeah. We've always got another question. If we run out, I've got another topic.
Cool. Let's just take a look then. So the first one actually came up on the first question that was asked by Pete, and this one is: what is the panel's opinion on the Bounceback loan / furlough scheme payments in terms of risk in the next 12 to 18 months, given the news of fraud, etc. recently?
Who wants to go first?
Well, I think it's already been exposed, hasn't it? How they're going to recover it, I really don't know.
Yeah. I think they had to do something, and it was the same with the deferrals and the payment holidays. Something had to be done to help the Joe Average out there. Did it get thought through properly? In hindsight, maybe not. And the bounce-back loans, yeah, it's been exposed, massive amounts of frauds, and deferrals as well. It's customers were given help at the point they probably didn't need it yet, and now that they really do need it, it's finished, and we're saying to them, well, back when you were earning 75%, 80% of your salary, maybe you should have paid 50% of your debts or your bills, or maybe 70%, and we said, don't worry about it for 3 months, and then we said, don't worry about it for 6 months. And now we're saying, okay, you need to pay it. and if you don't pay it, these are the consequences. So I think hindsight's great. You know, we can all look back on things and say, God, we shouldn't have done that. And this was done on massive scale. But we'd never had a pandemic really before, had we? Mm-hmm. So, you know, did any of us have better ideas? I think I did, but that's only with hindsight.
Are you running for Prime Minister then?
No. Hell no.
Turn me into an avatar, now you're going to be
There we go. There we go.
Yeah, that was a good answer. I think this one's, yeah, probably more for the lenders than you, Ange, probably. But you made predictions about the foreseen economic changes that we're anticipating. Is it up to us now, or you now as lenders, to make changes to your criteria?
Yeah, of course we're changing. You know, 100%. I think you know, we're always looking at, so that, you know, we don't want to lend money to people that aren't going to pay it back. Number one. Number two, we don't want to lend to people that are at risk of sort of paying it, of not paying it back, for sure. It's interesting. I think something that people used to. We've always collected occupation data in the past. And it's one of those questions you say to your credit guys, why? It's interesting, but we never use it as power, right? And now, post-pandemic, occupation is now used more predictively to kind of look at what kind of industry somebody's in. You know, you're sort of seeing questions now about who's your employer. Again, these were questions that didn't really feature in a sort of an application form 5 years ago. Interestingly, did 15, 20 years ago. So yeah, I think lenders will be tightening up.
But again, with all of that, there is an element of, if someone needs money, and they are going to need money, and us as lenders, subprime or otherwise, and we all say no, where'd they go? What is the unforeseen consequences of all the extra compliance and all the extra red tape? Because until we've done the education piece, which time hasn't allowed, apparently, people are still coming out of schools uneducated around finances. People are going to get money somewhere. And there's been a huge increase again in loan sharks. Yeah. And you know, the stories that come from those guys is horrific. So it is sometimes the unforeseen consequences, and latte drinking people, and maybe, you know, inclusive by design actually should have come into things a long time ago. Let's ask the people who actually don't have options as to where to get finance, how to improve it. There's no point asking those of us who are driving around in Range Rovers and Porsches and worrying because, you know, it's going to be a year or two before we get our new Porsche. Our problems are different.
It's really interesting, and in reality the FCA has woken up to it. So I think someone's mentioned this Credit Summit next week, and the rumour is that the FCA are going to use Credit Summit to make an announcement around their new position. So I think about 6 months ago they kicked off a market study to figure out what's gone wrong. You know, so hey, it's really hard to raise money right now in the market because of this regulatory uncertainty. You know, throw this economic uncertainty into it. So the regulator's been out there talking to investors, lenders, people that want to be lenders that aren't lenders now, existing lenders that are stuck. Because I think there is an acceptance now that, you know, while supping on the frothy milk, they might have swung the pendulum a little bit too far in the other direction. But I still think fundamentally there's like this triangle here that sort of goes, people in need probably aren't going to be the best at paying you back.
Correct.
You got to then price at risk. You price the risk and people's consciences begin to squeak. And you kind of have this cycle go around. And I think that's the political issue that needs to be addressed.
And poverty premium is, you know, again, another great catchphrase that's out there, and I get that for something that has no risk. So someone who has to pay, I don't know, monthly for something because they can't pay the annual fee up front. But actually the service they're getting is actually monthly and you could just turn it off. Why should they pay more for that? Okay, well that's because you could invest the money you got up front. But if it is a risk, and we're also in subprime, so you know, we're one of those bad guys that have got high interest rates, but our interest rates are based on your risk. They're not just based on profitability. But the people that we say no to, Well, where do they go? How do they get a car to maybe get a job or maybe take the kids to school or whatever the answers are? And those are the real questions that should become the political issue and should kind of take centre stage as opposed to some of the things that have.
So have you heard about the Vimes Index?
Yes.
So the Vimes Index, those of you who don't know, so it's Terry Pratchett, and Commander Vimes is a character, and he talks about the price of a quality pair of boots. And so the poverty angle here is to say that actually, if you buy a cheap pair of boots for say 50 quid, you have to buy a new set of boots every year.
Yeah.
So it'll cost you 500 quid to be booted, right? Actually, buy a pair of quality boots for 300 quid, they'll last you that whole time. And so actually, and these are some real structural problems, you know, and that's where access to credit can help,
yes,
potentially. But these are difficult things. But what I'm finding interesting is, I think, you know, this Vimes Index, I think our understanding of some of the underlying issues is beginning to sort of become improved now.
But again, it goes back to the education piece. If we'd spent, you know, this has been an ongoing problem for I'm always going to say generations. No one learned how to budget and finance at school. And every generation that comes out and kind of comes unstuck with it says, oh, I really wish they taught me this at school as opposed to Pythagoras' theorem. Who's used that? I mean, I don't know, I haven't. But it's never happened. You know, kids are not being educated on money. Kids are not being educated on how to budget and not knowing things like that. But instead, everyone's buying off throwaway fashion because it's cheap, it's easy, it's buy now, pay later. And landfill and everything that's wrong with that. But if at grade school levels you are being taught, you know, if you buy a quality product versus a throwaway product, it will go the distance, and actually it's an investment in the future. Well, maybe in a generation or two's time, we might be having different conversations.
I'm just lucky that a lot of my clothes stay in fashion, like Fred Perry t-shirts that are carrying with for 15 years. Never seem to go out of fashion, so...
Yeah.
So.
Value over price.
Yeah, that's what he says anyway.
Yeah. Cool. I think this is probably a good one to ask all of you, and a good one to end on, really. You've ended up as a career in collections and recovery or some form of it. Do you think it's attractive to new talent in 2022, or is it something that people just fall into?
I dreamt about being a collector as a kid. I didn't want to be a vet or a doctor or a lawyer.
Always my ambition.
No, it was a job. I fell into it. It was a job. It was easy to do. I wouldn't want to be on the telephones now. I'll put my hands up. It's a very different job. But actually, I think if you're the kind of person who wants to resolve situations for people and help people get out of debt, it is attractive. We just need to market it slightly differently.
Yeah, I mean, I've only been in the industry for 2.5 years. Before that, I was in private practice. The only reason I left was I couldn't make the money anymore that I could in private practice because the MOJ drummed down the rules and, you know, the solicitor's costs. So I just decided one day I would do a different career, applied for a role at Veristar. Obviously there was the litigation element and that probably swung it for me. But my role has completely changed over like the last 2 years. So I now do manage all our external DCAs, and also I've become part of the CICM, and I do think, you know, if we market it right, what Sam said, I do think it is attractive. You know, I think, you know, my daughter's just coming out of college, you know, wondering what she's going to do, and I think an apprenticeship with the CICM is really attractive for them. You know, I think it gives them a good skill set. So yeah, I did fall into it just for the money, really, but to keep my lifestyle. But yeah.
I don't think it's that much different than any industry. Some people just want a job, other people
want a career.
And you know, we come off the phone ourselves to contact centre, and sometimes you just feel that the person you're being was born to do it. They're very personable, they're knowledgeable, they're helpful, and then the next day you phone the same company and you have the worst experience in your life. So, you know, and probably all being trained the same, but it's you know, attitudinal, isn't it, in some people, that they're there to help, and you know, they'll go to different lengths. Other people, it's simply just a job and a way of life, and I don't think I think most industries are the same.
Yeah.
That you attract different type of people for different reasons. But is there a reason why you wouldn't want to attract people into this? No, because you've got different roles that people can do. Some very interesting roles, and as you can see how the evolution has grown and it's become more digital, it'll probably attract again different types of people again. But it's up to the individuals. Some people come in, go out, come back, and like yourself, you've made many changes and keep getting drawn back into it, don't you? So there must be something in it.
I love it.
Perfect, thank you. Yeah, I think so, yeah.
Thank you very much to the panel.
Thank you.